Alright guys, welcome to the channel. If you want to know all there is about living in Cleveland, Ohio, make sure to hit the subscribe button and hit the bell so that you can be updated on all things Cleveland. My name is Kip Sweeney with Living Cleveland, Ohio, powered by Mancuso Homes and eXp Realty. Today's video is going to be a little bit of a change up. We are going to talk to a lender here, Mike Bynack with Union Capital. We're going to just dive into what we can do and how to help you so that you can be the most prepared when it comes to buying a house or selling or investing. So if you guys are looking to buy, sell, invest, whatever it may be, obviously my contact information is in the description box below, as always. But make sure if you guys want to touch base with Mike, if you want any questions that we don't answer throughout this video, his contact information will be in the description box as well as his link. So make sure to check it out, give him a call, text, give him a holler, and allow us to help you in any way possible. Just let us know what you guys need, and we are here for you. All right, so let's jump into this video. Mike, why don't you go ahead and introduce yourself just a little bit?
Hey, Mike Bynack, Union Capital Mortgage. My office is in Hudson. We have 3 offices, one in Hudson, one in Westlake, and one in Mentor. The company's been around for 29 years now, almost 30, and I've been in the business 27, so.
Yeah, awesome. So we're just going to talk to him today. We're going to just dive into it a little bit for everyone, whether you're a buyer, whether you're local, whether you're out of state, you're an investor, again. And if you're a seller, we're going to give you some insight on how and why lending matters when you are selling your house. All right, so let's jump into it. As you guys know, Cleveland, or most of you should know, Cleveland is pretty unique and pretty diverse with its architecture, with the age of the homes, a lot of mid-century, but also century homes here, which plays a big role in financing, but also what you're going to do when it comes to finding a house. And everyone wants that turnkey property, but there's a lot of different ways to find the right home for yourself and a lot of different ways to finance that as well. So let's just jump into it from the buyer standpoint. What should people expect? What should they do? 6 months down the line, 3 months down the line, and then when it gets closer to that month time period, what should a buyer do to prepare for that, to make sure that they can get that financing, they're not going to hurt themselves by doing or buying something stupid, or just in general, how should they save and prepare for that?
6 months out, even a year out, you can start looking at your credit. Credit is a huge factor. It's one of the main factors we look at. If you're paying your debts on time, you're utilizing your debts the right way, meaning you're not overcharging on your credit cards. Your credit rating stays in a nice position if you don't charge over 20 to 30% of your credit card limit per month. So you don't really want to go over that ever. Even though the limit's there, you don't want to get near it. Like Kip said, make sure you're not going out buying anything that's not necessity in that 6 months to a year before. Odd deposits into your bank accounts. You don't want odd deposits in your bank accounts. It might be a little early to talk to a lender, but it never hurts just to even have a 30,000 foot conversation about, hey, here's what I'm thinking, here's what I have, here's what I've been doing, how does that fit into my plan? When you get closer into the 3 month realm, that's when you want to do the pre-approval. Pre-approval is pretty basic and easy. Pre-approval, I could send a link. People hit the link, fill out their information, basic questions, name, address, social, that kind of stuff, employment. The nice thing about the pre-approval now is, compared to what it was even 5 years ago, we use a soft pull up front, meaning that does not affect your credit score. Nobody can see the pull on your credit, anything like that, but it gives us an accurate credit score so we can take a look and see your accurate debts, all that kind of stuff. We'll also see how much you have saved, how you've been spending, what you're charging every month. With a 3 month time frame, as long as we see that on paper, we can usually say, okay, here's what you need to do if you want to buy 3 months from now. Where it really gets a little more crucial is when you get to that 1 month period. We can update the credit. We can do a couple things to make sure you're in line. And obviously saving money is the main key. If you can keep saving money into your bank accounts, there's grant programs, there's different programs to help, but having cash in your bank accounts is always crucial. A lender always wants to see you have some kind of saved money when you're buying the home.
Yeah, and so let me ask, if you are a buyer and this is your first home, what are some of the options for people if they don't have maybe the most cash to put down?
There's a lot of programs now. They sort of went away for a bit, but they've come back. There's a state of Ohio program called OFA, OHFA. It offers grant money towards down payment, and it could be used conventional or FHA. Conventional loan right now, the bare minimum down is 3%, which is great. And the OFA program allows them to get a grant for that 3%. You can also get seller concessions for the closing costs. So can you walk into the house with zero out of pocket? Yes, but the lender always wants to see something in your bank accounts to show you have reserves. Outside of that, there's a ton of programs. There's a program now for, I want to say it's 80% of the median income in the area. They also allow you to do 3% down, but they give you a 0.5% off the market rate, which is huge. And just giving round numbers, if the rate's at 7 today and you get 6.5, that's a big percentage off your rate and will bring your payment way down. VA is always a good option, especially if you're a first-time home buyer. At 0 down, no mortgage insurance, which that's a whole other question, but that's a huge perk to the veteran. So there's programs out there and there's a lot of things. Once we take a look at your credit and everything you have, then we can see what you qualify for as far as the first-time home buyer program.
So for someone that says, they call you 6 months down the line, they're just starting to really prepare, and let's say they talk about credit and you kind of have an idea that they need some credit repair. Is that something that you guys would be able to offer and help them with?
Yeah, I'm not labeled a straight credit repair company. There's companies that do that.
Yeah.
You have to be careful with the ones you work with because not a lot of them are what you think. A lot of them are bankruptcy attorneys trying to get you to file bankruptcy. But there are good credit repair programs out there. From doing this so long, I can usually take a look at the credit and say, okay, hey, if you pay off this collection and pay down that credit card, your credit rating is going to jump up. I don't know exact, but it'll jump up enough to get us where we need to be. There's different ways to tweak that too. Not only paying down credit card debt, but different ways to work with the credit card companies to get that in line, and just different things. If you've had stuff in the past, it takes so much time for those to not hurt your credit score anymore, so we can look at when is that timing going to happen. If you've had delinquencies on credit cards or things like that, when do you think it'll make your credit score go back? When will your credit score go back up from the timing when that delinquency was? So there's different ways to look at it, and yeah, we can definitely help do that.
Yeah, and so for anyone that might be needing credit repair, don't go out there and just hire any company itself, because this stuff is specific for helping you get a loan.
Right.
And so you don't want just anyone doing it for you, because if your goal is to buy the house, that's their goal here as well. So they're helping you make sure you repair that credit in order to get that loan for the home. Right. So it's really geared towards a specific method and making sure that nothing is wasted time. All right, so for people that are out of state or even local considering using national banks, why don't you go ahead and just tell them a little bit about why it's better to kind of go to your local banks and lenders rather than a national bank or organization?
Like any company, every bank lender has their specialty. Big national banks do great with certain aspects of banking, mainly deposits, that kind of thing, which is how a bank functions. When you go to a local lender or a local bank, we only do mortgages. That's what we do. So we know the ins and outs of mortgages. I can't tell you how many times I've had people start their process with the national bank, they bank with the national bank, they feel comfortable with the national bank, get a quarter of the way through the process, the national bank is using an out-of-town appraiser, or they're asking for things that don't make sense for the area, or they quoted you something that, again, doesn't make sense for the area. Local lenders know the local markets, and most times the smaller lenders have a little more variance on what they can approve compared to the big lenders. We all underwrite to the same guidelines. There's federal guidelines out there that we all follow. That just makes sense. We have to verify that you've paid your taxes. We have to verify things are done the right way. But debt to income ratios, we have a little more leeway with the debt to income ratio, whereas a big bank doesn't, because they have to follow giant protocols through the government. So we have a lot of things we're a little more flexible on, and we know the area. So our appraisers are from the area. If I have somebody buying in Avon, that appraiser's from that area. If I have somebody buying in Brecksville, they're from the area. Same with Hudson, same with Cleveland, same with all those areas. So that's the nice thing about a local lender, local knowledge.
Yeah, exactly. And guys, these appraisers can make or break your deal. Getting your application, your loan is one thing, but once you go under contract and you're super excited, you won in multiples, or your offer was chosen, and you get the wrong appraiser, or someone that doesn't know what they're doing or that doesn't understand the area, that can make or break the deal, especially for a seller. So if you're a seller and you look at who they're pre-approved by, there might be people, I'm not saying to stay away from people, but there might be some hesitancy on which offer you're going to choose based off of who's pre-approved by who. And speaking a little bit more about Union Capital, you were telling me a little bit about how previously you guys also have kind of the bank side too, right? You guys had been acquired a little bit, so you can kind of pick and choose the side that you want to go, or?
Correct. Yeah. Correct. Again, there's guidelines set up that everybody has to follow. They're rigid, but if you've been doing it long enough, you know what fits in what certain spaces and what loan will take what and do those sort of things. Having a small bank as part of our company, we also have the option of something called portfolio. So let's say, just an example, you got divorced and you just started receiving alimony. Well, under Fannie Mae, Freddie Mac guidelines, you have to receive that alimony for at least a year in order to use it. It's just the way it is. If it's strong and if we can see there's a history of payment and if it makes sense, we can go to a portfolio loan, which the bank backs. It's not Fannie Mae, Freddie Mac backed, and we can do that loan for people because they have strong credit, they have the money down, and they are getting paid every month. So there's different things, and that's just one example. There's a lot of different examples that Fannie Mae, Freddie Mac have that we can do that Fannie Mae, Freddie Mac won't allow.
Nice. Yeah, so flexibility and options.
Right.
Right, everyone needs those. Perfect. So the next thing we're going to talk about a little bit are selling. You know, for the sellers out there, what is this like to you? Why is lending important for you and understanding what's there? Well, number one, and something that not many sellers actually take into consideration is the fact that your agent can go ahead and call the lender. So, Mike, what are some advantages of getting your, the listing agent on the phone with you to talk about just maybe one of the buyer's qualifications and what that looks like to them?
Well, I think Ohio in general, but Northeast Ohio, the market is so crazy right now.
Yeah.
You could pre-approve somebody, hand out the letter, but everybody's walking in with a pre-approval letter. And you can see strengths, how much they're putting down, what they're putting in earnest money, how quick they can close, that kind of stuff. What I've noticed is, lately, I will be talking to more listing agents, which is not the norm, but I do, to reassure them how strong this client actually is. You cannot give details, like you can't say what their credit score is or how much they make, that wouldn't make sense. But you can say, I don't see any hindrances on these people buying this house, and they're super strong, stronger than the average consumer I have come in to look for a loan. So talking to a listing agent, a lot of lenders don't do. In fact, a lot of lenders, especially the bigger lenders, say, we will not talk to listing agents, which is we'll give them updates during the process, which makes no sense. That's my other thing. I update at least once a week on where we are, where we're at in the process. Appraisal's done, financials are in, title work is in, it's been through underwriting, it's been through processing, all those things, so we all know we're all on the same page. If there's a hiccup, hey, this happened, what are we gonna do? Everybody's aware of it. And I just see more and more of this. The lender doesn't talk to the agents and doesn't let them know. So that's a perk to talking to the listing agent because it gives them security, and then that offer is probably chosen over the one where the lender won't talk to them.
Definitely. Yeah, and again, expanding on that, using a local lender, a lot of the time when you have that communication, like from a selling standpoint, you're gonna understand, like if you have to be out of your house by a certain point, you're really banking on somebody coming through and not falling out. Well, making sure that you have that communication, everyone's on the same page is critical, and understanding where that buyer lies, where they stand, and how certain you can be with that person, that offer itself. And so continuing on, now, like we spoke about, it is a crazy market right now, but what are some of those advantages, or what can a seller do when it's a little bit of a slower market? When you have 4 or 5 homes in your same neighborhood that compare pretty equally to your home, what could that person do to try to get their house picked over their neighbors?
You have a good amount of options. We weren't in the market for a while, but if you do have that situation, so there's a buy down option. So rates are a little bit higher than everybody was used to. It seems like everybody's getting comfortable with that now, but rates are a little higher than they used to be. They're forecasted to go down. It might take a year, it might take 2 years, but they're forecasted to go down. What can a seller do to help? There's something called a buy down. So the seller can contribute towards the buyer's buy down of rate, which is really paying a portion of their closing costs in the scheme of things. Let's say the house is $100,000 and the buyer's putting down $20,000, so the loan amount's $80,000. If you pay $800 towards the closing costs, that pays down their rate by a roughly 0.25%, depending on the day and pricing that day. If you pay $1,600, which is considered 2 points, that would buy their rate down 0.5%. That is huge when you're going, basically, especially when you get into the higher priced homes, that's huge on a monthly basis.
Yeah.
So that would set you in front of some of the sellers that aren't willing to offer a concession to do that. You can also offer just a straight concession towards closing costs if you really wanted to. Yeah. So there's options to do that. There are percentages you're allowed to give based on down payment, but those two options, 2-3, you can go all the way up to 3% with as little as 3% down as a seller concession. and you'd still be okay.
Yeah.
The higher the down payment, the buyer can actually accept a bigger concession from the seller.
Yeah, and I mean, sellers, for you guys too, when you're thinking about this, maybe it isn't the slowest market, but maybe, you have a certain price in mind that you're trying to make, and you're not trying to, your house is sitting, we've seen this, we have some people right now that are dealing with it where the house is sitting a little longer than they want it to sit for, but they don't want to make this crazy price adjustment. So from a standpoint of like the amount of money that you'd actually be losing, by offering these buy downs or concessions, sometimes you're actually gonna save a little bit of money rather than saying, let's do a $15,000 cut
Sure.
on our home. So maybe, everything went well, but for whatever reason, your home's just not selling. This is an idea that you can offer rather than making that giant price cut. Have another open house, get the eyes on the house again, and make sure people are aware of that 3-2-1 or that buy down or whatever it may be that you choose to do and offer.
And only that buy down usually does change their payment more than bringing the price of the house down.
Yeah, definitely. And it helps both sides. Get the house sold and the buyer's happy, especially at a time when our rates are so high. So a common question that we always get as agents is, hey, should I buy now? Like, or I'm gonna wait until the rates come down or something of that nature. Well, from a lending standpoint, what would you recommend? I mean, we have our own thing, but like this video is about the lending standpoint. So what is your recommendation?
My personal opinion is I'll buy rental properties myself, things like that. I am not strayed away from buying them, even with the higher rates. And some of these rental properties I bought a year and a half ago, the rates would seem astronomical at this point. But here's the problem, especially in Ohio, Northeast Ohio, our values just keep going up. So a home last year, I forget the average, I think it's like 10% now was the average. It's a pretty steep jump where these home prices have been going. They don't see that stalling anytime soon. So if you're gonna buy a house today, that's let's say 300, and again, I think I'm high because rates are a little bit lower, but let's say the rate's 7. Okay, rate 7. If you wait to buy a year, because rates go down to 6.75 or 6.5, but then the home price is 330, did that really save you anything? Probably not, because now that home price is up, the rate's down a bit. If you bought it a year like today, and refinanced it when rates go down, well, now you got the lower home price and the lower rate. So waiting is not always the best option, just like anything else. You're hesitating on a market, you don't know what it's gonna be doing. So they're forecasting rates to go down. They are not talking like 1% in the next 6 months. So you might see that in a year, you might see it in 2 years. So at least if you have the house at the price now, without the steep increase, you got a better chance to get that payment down and have a better value in the house too.
Yeah,
you got equity built in.
I was gonna say you're already building equity, and it's much better if you're a renter at that. It's much better because you're not paying for someone else's house any longer. You're actually paying for your own. And so something else and something huge about actually speaking with lenders too is that once you are pre-approved and once you've spoken to them, if there's a house that you like, run it past them and they'll give you that monthly budget. People look at the price constantly, what it's gonna cost and all that, but you don't know actually what it looks like from a monthly standpoint, because maybe it's more reasonable than you think. So when you at least break it down into just something that you can perceive, whatever it is, however you like it, it's gonna make a lot more sense and it's just gonna be a lot more clear for yourself. Because that's huge, like people are just waiting to buy, but the Cleveland market is completely different than the national. We're constantly catching up. And so for Cleveland market, where people if it's a house that you love, there's no reason to skip it because of a rate, because you're scared of that. Because in the future, you're gonna be able to get that rate down in different ways.
Yeah. And like he said too, and that's another difference, going back to where we were, national lender to local lender. I always tell my clients, if you find the house, just text me.
Yeah.
It could be 10 o'clock at night, and I'm still texting people back, depending if I'm up. But I'll do that. The national lender is not going to do that. The national lender will not do that on the weekends. There's no access to that lender on a weekend.
No, and I mean that's critical too, because like when you find that house and you want those monthly numbers, but say right now in the market that we're in, where the homes are on the market for 2-3 days and they're calling for highest and best. Well, you don't have that time to just wait for a national lender to get you these numbers. You need that stuff pretty soon and right now so you can make that decision and understand what you can offer. Because right now we are going over ask. We are doing no inspections. We are doing crazy things, but having that financial side and understanding is huge, just to know what you can do and what you would feel comfortable with. All right, so next up for buyers again and for those investors, because right now we are definitely getting tons of investors coming to the area looking to buy and looking to get into the market since it is a very hot area right now. But for someone that's looking maybe for a buyer or somebody else and they just can't find the right house, and they find the right home in the right location, but it needs some work, it needs some updates. What are some options for people that may not have the cash up front to pay a contractor right away? What could they do to get into this home in the right area, but then update it and make sure it's what they want?
There's a lot of options now. In this market especially, there's a lot of buyers not looking at fixer-uppers, which those are the hidden gems, because if you can get a structurally sound home and do some work to it, you probably got it for less than what the market's at, and you can fix it up and make money in the future and have the equity built into it. But that said, first-time home buyers, there's an FHA loan called the 203K. It lets you do the renovations you want to the home. So any updates, you can do kitchens, you can do bathrooms, you can do flooring, you can do painting, you can do pretty much whatever you want. Roofing, you name it, you can do it. And it allows you to do it with as little as 3.5% down. Then you can do a regular renovation loan. Yeah. We talked about this a little bit. Fannie Mae has one called the Homestyle Renovation. It's a nice loan, it's conventional. The pricing's pretty good and it's pretty easy to get through, and you can do the same thing as the 203K. Minimum down on that is 5%. So it's a pretty good loan. The next one is just a standard renovation loan, and we offer a couple different kinds of those because we do full constructions. Those require at least 10% down, but those are big time additions, that kind of stuff. So if you're buying a house that's a little smaller than what you want, but you want to do an add-on, you can do that, and then you can double the size of the house. You can do a couple things that will work. Depends on where your zoning is or where you're at, but there's options to do it. If you're a seller buying another home, so moving up, and you need renovation on the new home, a bunch of different ways to do that, but one of the easier ways, and this you'd have to sort of plan this, you could take out a home equity loan on your current home. Again, you'd have to plan that the right way, get that equity loan open and ready to go. Then when you buy the new home, you can use that money to renovate while you're living in the current home, then sell the home, pay off the home equity loan in your current mortgage. So there's a lot of options to do the renovations on all these houses.
Yeah, and that's actually a funny method too. Well, we were just talking about that. There's someone that I know that does, the way they have someone sell their house, they get that HELOC, and that HELOC, the percent that they get out of that is their new budget. And so they take that, and they take I don't know necessarily if you should know this, but they take the cash, and they make it a cash deal.
Oh yeah.
On the new house that they're buying. But now they're going into this house basically not spending any money per se, because once they sell that old home, it's an interesting method though, but something that seems to work pretty well.
If you have the equity, it's not a bad option.
Yeah, that is an interesting one. But now for the investors out there, and for maybe some 1099 people like myself, or people that may not have the best credit. Well, no, I take that back. You have to have good credit. But for the people that just are 1099, that have the cash, you're not looking to go through that conventional loan, an investor looking just to get something, buy it, rent it out. What are those options for people? Most specifically, kind of what I'm thinking about, that DSCR.
DSCR loan is a great loan. What it allows you to do is you can take the rent for that area, for that type of home, and the lender will base your approval on you receiving the rent that would cover that note. So in terms of debt to income ratio, it's covering what you need, it's paying the note, and we don't need to see anything else. You're in a good spot and you're approved to buy that rental. So it gets you into the house without, I work a lot with self-employed people. It's not as hard as some people make it sound, but it could get sticky depending on how you write your taxes. Which everyone writes their taxes differently, so it just depends on what you're going to do. But yeah, the DSCR loan is a great loan. It gets you in using rent for the area, or if the house already has a lease, which is amazing. Yeah. Then you're in a really good spot.
Yeah, so like think turnkey, tenant already in there. I think that'd be your best bet for those itself. I know a lot of people are using those here in the area, so it's just something else that's popular right now in Cleveland. Yeah. All right, so last thing that we're going to touch on is just some common misconceptions. So like one of the big things that I think I see is the pre-qualification versus pre-approval. Is that something that you guys see quite a bit?
Lately more than ever, and I don't get it, and I get that what I personally think happens is somebody talks to a big bank or a lender, and they're very worried about their credit being pulled. Pre-qualification really just means that you talk to a lender, you told them what you make in income, they didn't verify it, You told them what your debts are in your credit report. They didn't verify it. And they're running numbers based on that. In this market especially, when you send a pre-qualification letter to a realtor, they know exactly what that means and they will not, 9 times out of 10 will not accept it. To me, it's as good as the paper it's written on because there's no backing to it. Nobody has checked income. Nobody knows what's on your credit report. You can tell them you have an 800 credit score and have a 500. There's really nothing there. As far as a pre-approval, and like I said originally, when we do a pre-approval now, we do a soft pull. So you don't have to worry about it affecting your credit, anything like that. And to be dead honest, one credit pull is only about 3 to 5 points on your score. So if you have good credit, it's really not going to affect it, but we don't even do that up front anymore. So on a regular pre-approval, we can give you a full-blown pre-approval where we would just do a soft pull. I could see your full credit report. And then we'd also do the verification of income, which you just send me a pay stub on a W-2 and we know what you're making. It's pretty easy and basic. So that's the big difference. But the pre-quals, people, I know a lot of consumers feel comfortable with those. On the buyer-seller side, realtor side, they do not. They're just not, they don't mean anything.
I'm telling you right now, if you get the agent to accept your pre-qualification without having you get pre-approval, then either you're working with someone new, or you're not gonna have a good experience, or you're not gonna have a good offer. You're not gonna be, you're like, why do we keep losing these in multiples, blah, blah. It's just, if they're accepting it, then they either are desperate or they're not understanding it themselves, so just be careful for you, But what else? What's another misconception that you guys see on the lending side of it? Or not misconception, but what's a lot of those don't do's that people should not do? Whether that's right before getting a loan, whether that's being under contract on a house, what should they stay away from?
Definitely do not want to open any new debt. I get, and this is not a lot, it's probably 20%. When people are buying a home, for some reason, either their car lease is coming up, something's coming up, they're having a baby, different things are happening, there's life changes. So they want to buy things. Don't buy a new car. It's a life changer. Have I worked through it? Yes. But if anything's different than what those salespeople told you, it could affect the loan. You could get turned down. Meaning you made it all the way through the process, and now right before closing something happened, being your payment went up, something where you don't qualify anymore, they will turn you down. Like we have to.
Cash is king during that time. If you need to buy something.
Buy cash. Oh, don't go to 6 months savings cash. So the Best Buy purchases, TVs, electronics, anything like that, furniture. I know everybody gets appliances. I know everybody gets excited. It's an exciting time. It's a great time. But doing any of that before close is a big no-no. I've had it happen, and it's just not a good way to go. And I've had it happen with the car also. You just can't do it. Cash is king. If you could save cash, use that for any of your expenditures. If you really need to do it, again, I don't know why you would need to do it, but if you need to, that's why that's there. That's why you would do it. Too many credit pulls. For some reason, I've seen people have their credit pulled all throughout while we're doing the loan. At the end of the loan, every lender has to do a soft pull. Again, 3 days before closing to make sure there's no new debts and there wasn't a bunch, who pulled the credit. If there's a bunch of credit pulls, we need explanations for each one and know if there's going to be any new debt. If there is, we need copies of those notes, credit card statements, anything like that.
Yeah, it's just get through it, get closed, and then do what you want to do after that. But you'll have a lot of unhappy people if you make those purchases in that transaction and come closing, you can't any longer. It's not a good experience. And I mean, your emotions are going to be shot as well after thinking that you're going to be in this new house and you're really looking forward to it and have all that excitement, and then bam, you can't because you decided to buy a car or something like that. But good to know. Is there anything else that you would add? Anything else that you can think of?
At this point, I think a lot of the things we talked about are the common sense things. You can get more in depth in every situation. So your situation's your individual situation. So you can always talk through that with the lender. If you want to call me and say, hey, here's what I've been thinking. Is this going to work? We can always talk through that. Documentation of money. That's something. So that could cause a hiccup. You're only supposed to get a gift from a blood relative in most of the situations, depending on the loan. If there are any deposits in your bank account over 50% of your normal pay, we have to verify where those came from. If they are cash, they're not verifiable. You cannot use that income. So, and this is if it's within 2 months before close, because we check 2 months of bank statements. So if we see those deposits, we have to verify it. And if it's $50,000 from John down the street, that money is no good and we cannot use in the assets and you cannot use it to close. So that's one more hiccup I see. It's not as much as you would think, but
Sure.
it does happen.
Yeah, especially with family members or people helping.
Right.
Especially with the price of homes, a lot of times people are getting help for down payments and things like that, so closing costs.
There's special ways to document that stuff, and you can do it. There's just special ways we need to go about it.
Yeah, no, that's great. So just to wrap everything up, what would be your number one piece of advice for a buyer, a seller, and an investor? So 3 different pieces of advice, but what is the one thing that they should really take away in each group?
For a buyer, and you see this all the time, it's probably just said way too many times, but it's common sense.
Yeah.
Keep your credit score as high as you can. Don't open any new debt. Save your cash. That's key. So you're sort of prepping to buy the house. As far as sellers go, in my world, and obviously this is what we do, and you could talk to your, the people you're selling a house for. Local lenders, and I'm not just saying this because I am a local lender, I see the horror stories, I pick up these things when they do fall apart. They're gonna be the most insightful for that area, for the area you're buying in, and for everybody involved in the process. They know the local markets, they know the local people going out to do all of this, and they're gonna be more, I guess, accessible.
Yeah, and we kind of hit on it earlier too, but like if you're a seller that needs to close quickly, a local lender and their appraisers are going to be out to your house much sooner than someone national. So you're going to be able to keep that process moving.
Yeah, a lot of these things, you got, timing's crucial now. A lot of people, sellers want the buyers to close quick. If you have a 3-week close, 2-week close, there's no way a national company's going to be able to do it 9 times out of 10. I can't say numbers. As far as investors go, I work with a lot of investors. There's rules on how many properties you can have, things like that. So that's a whole nother world of detail. But I would say it's sort of the same thing as a regular buyer. Cash is a lot of king in that because it requires a little more down. Minimum down on a single family home for an investor right now is 20%. Multiple units, usually 25%, depending on how many units you got, up to 4. And keep that credit in mind. Credit's another key. I have a lot of investors that have done some things on the side where they, charge up their credit cards and then pay them off once to do the renovations, which is fine. But if you're gonna do that, your credit score is gonna drop for a bit and pop back up. So you gotta do, all the timing's crucial. And again, I work with a lot of investors, so it's not hard to do, it's just a matter of knowing how to do it.
Right. Yeah, there you go. Well, if you guys have any questions, any comments, if there's anything that you want to know more about, leave it in the comments below. We can answer them and give you that information. Of course, again, both of our information, Mike's information will also be in the description box below. So make sure to go there, visit the link, visit the website, check him out, give him a call, text, whatever it may be. But you can contact him there and have him answer any other questions that we didn't get to. But otherwise, this is good. I hope you guys got a lot from it. It helped, and see you guys in the next video.